Good morning, happy Friday, and welcome to Sunrise Small Talk episode number upper 80s, maybe 90. I don't know, we're almost at 100 though, so I need to start thinking of something creative for the 100th episode. Today we're going to continue along in the series talking about money managers, their thoughts, their trade rationale. Most of the money managers that we're talking about, you probably are invested in if you're watching these videos. Today we're going to talk about and highlight PIMCO, the global authority in bonds. I don't know if that's still their moniker, but it used to be. They said it on CNBC all the time. I don't really hear them say that anymore, so maybe I'm living back in the past. So let's dive right in and hear what they are thinking about the economy and the markets, specifically the fixed income or bond market. One quick special message before we really get into the meat and potatoes of this is it's Mother's Day this weekend. So happy Mother's Day to my mom, who usually watches this, and happy Mother's Day to all the moms who are watching, and the grandmothers, and the trying to become mothers, and everybody out there. Have a wonderful Mother's Day celebration. All right, let's get into the meat and potatoes. All right, so first and foremost, my shoe's untied and it's bothering me, but that has nothing to do with your portfolio. So let me talk about things that you care about. I'm just going to read a few things. This is actual statements that I have in front of me from the investment manager, PIMCO. I'm just going to read a sentence or two and then talk about what that means in plain English, because a lot of this is just kind of technical finance jargon. So to start, geopolitical conflict in the Middle East sparked some concerns over energy markets, driving global sovereign yields higher on fears of elevated inflation. What does that mean? Well, obviously, we know about Iran, and we know about the potential impact, negative impact, that the war in Iran is having, not only on energy prices, but commodities in general. So what does that mean, and what do we do about that? Well, let's look at the positive. Driving global sovereign yields higher on fears. Higher yield is good when you're invested in bonds. PIMCO is the bond manager out there. And so that means opportunity. Higher yields. Yield is the income you get from your bond portfolio. So we'll talk about that information and how they apply it to some of the trades that they made in the next phase of this episode. Next sentence, the U.S. paused its cutting cycle amid an uncertain inflation trajectory given energy price uncertainty and tailwinds from the 2025 tax cuts despite softer employment prints. Okay, concerns about employment here. Tailwinds from the 2025 tax cuts, that's been a big boost to dollars in our pockets at the end of the day. And what really stands out to me here is that the U.S. paused its cutting cycle, meaning the Fed and interest rate cuts. And that's going to continue because right now we have uncertainty, and the Fed is saying we don't know if we might not cut, we might raise, but for now we're just going to stay as we are because there's too much uncertainty. Why is that bad? Because typically rate cuts drive a boost in the market. If we don't have rate cuts, we may or may not get that boost. If we have rate increases, it's probably not going to be, the market's not going to react very well to that, based on how the market reacts historically. Okay, next sentence. A directive for the GSEs to purchase agency MBS also provided technical tailwinds to the mortgage market. What does that mean? Well, what's a GSE? That's Fannie Mae, Freddie Mac. I don't know what the actual acronym means, but think mortgages. They had a directive to purchase agency MBSs, mortgage-backed securities. So what does all that mean? That means Fannie Mae, Freddie Mac are buying mortgages, which boosts mortgages. By boosting mortgages, that is a positive for the housing sector. So all in all, that's a good thing. Talk about what they do with that information when it comes to actually trades again in the second phase of this video. And then last sentence here, globally, the conflict in the Middle East drove commodities higher and markets faced continued uncertainty as global shipping routes became constrained. That's not new news. We're talking about oil there, commodities. If you noticed, we did have a recent change in the portfolios. Many of the portfolios, we increased the contribution, the percentage allocated to real assets and commodities. So that's something that you'll probably see if you log in and take a peek at your portfolio. Done really well for us so far this year. Okay, so and then another just theme overall before I talk about some of this more specific trades. reductions in allocations, additions to allocations that PIMCO has made within their portion of the portfolio. Big thing they talk about is duration. So here's what duration is. This equation, this is kind of silly. When you get your CFP, you actually have to know this equation and make calculations. You're given a bond portfolio A and bond portfolio B, and you have to calculate the duration, and then they're going to say, well, what if interest rates go up or down? How will that affect bond portfolio A and bond portfolio B as far as duration, which is kind of the main measure you're looking at when you're looking at a bond portfolio. And you have to be able to calculate that and say, well, bond portfolio A or B is better based on the changes in the environment that you've given me and based on my calculation of duration. Guess how many times I've used that in my career other than to pass some classes in college and to pass the CFP? Zero. Absolutely never even crossed my mind, but I guess I'm using it right here in this video. I say that because that actually is important, because I think it's important to understand how risk is managed inside of a bond portfolio, and it all comes down to duration. Why is that important? Because when a company like PIMCO is telling us that they are at the max end of their duration that they're comfortable with, and they want to look at ways to maybe reduce that, or in a different environment where they're feeling a little more comfortable and they want to increase the duration, all they're talking about is increasing or decreasing the risk inside the bond portfolio. So there you go, that's your lesson on duration, and now you know how to calculate it based on that equation. Okay, so what have they done specifically? Just 3 things inside the portfolio. So number 1, the big theme where they have reduced exposure is to their ETF bond, BOND. It's kind of it's just their core bond allocation portfolio. Simple, boring, kind of covers everything. Domestic, international, big, small, high yield, low yield, just very diversified bond portfolio. And so they have reduced exposure there, and they have increased exposure to PYLD and PMBS. PYLD, just higher yield, like I talked about earlier in this video. So they're looking to increase some of the yield in the portfolio. And then PMBS, that's a securitized mortgage-backed securities, which is just Fannie and Freddie owned mortgage-backed securities. They've increased the exposure to that fund as well. And then last thing I'll leave you with here, the third thing, like I said, they're just looking at higher quality exposures. And so there you have it, probably more than you wanted to know about bonds. Last little tidbit, I don't know the numbers, but I have talked about it in prior Sunrise Small Talk videos. I don't know them off the top of my head, but we always talk about the stock market. What really can drive the performance of your portfolio is the bond market, because the bond market is massively, exponentially larger than the stock market. So while it's not as exciting to talk about, it's not as exciting as it would be to talk about the SpaceX IPO and Apple stock and Google stock, the bond market really matters. So PIMCO, your global authority on bonds, or so they used to be. Have a great weekend. We had our snow, and it's going to be 80 and all that, and have a great Mother's Day. Happy Mother's Day to all the moms out there.